welcome back to the show. The market is going in with muted expectations into the credit policy. So the Sensex and the Nifty are down about 0.5%. You heard what the bankers are expecting, but let's hear out from India Inc. what the expectation is this time around. Sarang, Wadhawan, the Vice Chairman and Managing Director of HDIL, joins us now to give us his view on not only HDIL itself, but what the RBI might do today. Sarang, hi, good morning. From an industry point of view, so far the RBI has cut the rates by 50 basis points this year. If we do get an additional 25 basis points rate cut, will it help in spurring demand at all? And has demand improved since the 2 rate cuts have taken place since Jan?
I think demand overall has improved on the residential front. On the commercial front, it is still a little muted, but I think we see green shoots of recovery in the real estate sector. Residential demand has picked up. RBI's move over this quarter, honestly we'll have to wait and watch, but looking at the overall macroeconomic factors, looking at the rainfall, I think the expectation is 25, and I hope RBI lives up to that.
Okay. Hi Sarang, good morning. So let me take up on the point that you made about green shoots in the green shoots in the economy. Residential segment is showing some recovery. For you, in the quarter gone by was a good one. Your pre-sales were up close to about 80-odd%. The company had free cash flow generation as well. How have the first 2 months of this fiscal year been, the April and May, in terms of any projects which came in for revenue recognition, your pre-sales growth, as well as cash flow generation?
I think the one thing that we are proud of is for the last 6 quarters we've had free cash flows. We've been cash flow positive. Having said that, and that has helped us reduce our debt considerably. Our net debt is down to close to 3,000 odd crores. But over the last quarter, we have been focusing a lot more on TDR. We have been focusing a lot more on the ongoing projects, the completion of the ongoing projects, and the execution overall. We are not focusing right now on new launches. We already have a bit of inventory which we need to offload, and I think over the next 2 quarters we're going to focus on execution a lot more. Look at where TDR goes. TDR currently is at an all-time high of about 4,500 to 5,000 rupees a square foot, and that's a good vertical that we are in currently. We are seeing good demand there, so let's see how that goes.
Okay, so let's talk about some of your projects. Then Sarang, in your Whispering Tower project, 50% of phase 1 has been completed and about 20% of phase 2. When can we expect a completion of this project? And also in another project, Majestic Tower, 60% of your project has been completed. You've sold about close to 6 lakh square feet. Just give us an indication of which are the projects that could see completion, say in the first half of FY16 or by the end of FY16, and where do you see revenue coming in from?
I think one of the big factors for us is the project completion method, and yes, we have other projects, not just Whispering and Majestic. Those projects were already delayed because of the amendment in DC regulation. We had to delay those projects a little bit. They're due for completion in 18 and 19. I think we also have other projects like Metropolis which are due for completion this year end. So hopefully once that revenue hits our P&L, I think that's where you will see a good chunk of our revenue come in. We're expecting we will match up or be above 10 to 15% over last year's results.
Okay, on TDR, you said that the realizations are at all-time high of 4,500 to 5,000 rupees per square feet. In your conference call, you had indicated that the company, at least in phase 1, will generate about 2.5 million square feet of TDRs. What's the timeline of that? And overall, are you confident that you will be able to realize up to 5,000 rupees per square feet in your TDRs?
Definitely. I think TDR, considering the kind of amendments that we have seen in DC regulations, considering the kind of execution that is currently happening on the ground with other developers in Mumbai city, TDR is at an all-time high. 5,000 is an achievable rate, and yes, we have been selling at that price. 2.5 million square feet is what is slated for this year. The focus is that now the government has finally decided that whether it is for the airport or whether it is for BMC, the tenements that we had created at our Kurla project will be utilized by the Slum Rehabilitation Authority for their requirement. I think that's a big step for us, and if 2.5 million square feet is what we're going to get this year, we're going to try and monetize the entire lot, and hopefully that will add a kicker to our revenue.
So that will be 1,250 crore?
Well, we are hoping that we are able to achieve that figure, but having said that, TDR demand is dependent on other projects and the execution that other developers also go through. And having said that, I think we've seen a good demand for the beginning of the year. For this quarter, we have been able to monetize close to about 250,000 square feet. Let's see over the next 2 or 3 quarters what are we able to achieve.
Okay, finally then, the big trigger for HDIL has been the way you guys have managed to reduce your debt. At the end of FY15, you've brought it down to around 2,950 crores. Just tell us what the plan is for the end of FY16. How much could you bring it down to, and how would you do that? Through free cash flow generation itself?
Well, let's say if we are cash flow positive, yes. If we are free cash flows and we are cash flow positive over the next 3 quarters, our endeavor is to reduce debt by another 25%. Hopefully by this year end, we are targeting to be close to about 2,250 to 2,500, anywhere in that range. And I think that's a good figure. That's a comfortable figure for us. If we're able to achieve that, I think we would have done pretty well, considering our all-time high debt was at about 4,200 odd crores.
All right, Sarang, we'll leave it at that. Thanks for joining us and taking us through what to expect from the company as well as the debt reduction plans. Well, with that, it's a wrap on this edition of Bazaar, but stay tuned. Our complete coverage on the credit policy starts at 10:45 a.m.